What if I told you? Most Americans work their entire lives, but never truly understand how money actually works. They earn it. They spend it. They save a little. Maybe invest a little. But the real system? The engine behind it all? That's controlled by an institution most people never study. The Federal Reserve. And once you understand how this system works, you'll never look at money the same way again. Dollar Banknote Part 1. Where money comes from. Let's start with a simple question. Where does money actually come from? Most people think the government just prints it. But it's more complicated than that. In America, money creation is largely controlled by the Federal Reserve, the central bank of the United States. When the economy slows down, they lower interest rates. When inflation rises, they raise interest rates. But here's what most people don't realize. Banks don't just lend money. They create it. When you take out a loan for a house, car, or business, that money didn't exist before. It was created digitally. That's how the money supply expands. Chart increasing Part 2. Why inflation happens. Now here's the problem. If more money is created, but goods and services don't increase at the same speed, prices rise. That's inflation. In recent years, Americans have felt this everywhere. Groceries, gas, rent, insurance. Inflation isn't random. It's a result of policy decisions, supply shocks, and money supply changes. And when inflation rises too fast, the Federal Reserve increases interest rates, which makes borrowing more expensive, which slows spending, which slows the economy. It's a balancing act. Bank Part 3. How banks really make money. Here's something most people don't understand. Banks profit from the gap between what they pay you and what they charge others. If your savings account pays 4%, but your credit card charges 24%, that spread? That's profit. Major banks like Bank of America and Chase Bank operate on this model. And credit card companies make billions from interest and late fees. The system isn't designed to make you rich. It's designed to reward financial literacy. Bar chart Part 4. The stock market connection. So where does investing fit in? When you invest in the stock market, you're buying ownership in companies. Indexes like the S&P 500 track the largest U.S. companies. Over decades, the market has historically grown. But here's the catch. When interest rates rise, markets often slow down. When rates fall, markets often rise. Why? Because cheap money fuels growth. Expensive money slows it. Understanding this cycle gives you power. Credit Card Part 5. Credit Score. The Hidden Game. Your credit score isn't just a number. It's a financial reputation score. Higher score equals lower interest rates. Lower score equals higher payments. Two people can buy the same house. One pays $1,500 per month. The other pays $1,900. Same house. Different financial education. Over 30 years, that difference can equal hundreds of thousands of dollars. Brain Part 6. The Real Secret. Here's the truth most schools never teach. Money isn't about working harder. It's about understanding the system. If you control debt, invest consistently, understand interest rates, think long-term, you start playing offense instead of defense. The wealthy understand the rules. The middle class often just follows them. Fire outro. Now you know how money really works in America. But this is just the foundation. In the next video, we're breaking down how the Federal Reserve's next decision could affect your job, your investments, and your savings. If you want to understand money at a deeper level, subscribe, because the system isn't going to explain itself. Thank you.